we're off to the farmer's market, and you're probably wondering, what does that have to do with business? And so we're making a connection between one of our lead magnets, basically, was creating a healthy cookbook that clients would be interested in, that honestly, most of the food that they can eat there is going to help them in losing weight anyway. And so we have it as part of our program. So it's kind of like a freebie that they're going to end up using as a part of our program, and it works. So it makes them like trust us more. But we're going to the farmer's market because it's obviously very highly populated with a demographic that is looking to get healthier food. So we assume that they're looking to get healthier in general, or at least aware of their health. And so if we get local farmers that are a part of the cookbook, basically, so we'll be walking around talking to the farmers themselves, not really the customers, but most of the farmers, to be like, hey, we're actually creating a new cookbook. We want to include local farmers and local ingredients that are healthier, cleaner, that we can include in the cookbook to help clients around the Fort Worth area. And then so that helps them out because we're going to shout them out and include them in the cookbook. And then it also helps us because possibly next week we're actually going to be posting up there and talking with clients. So it helps if you already have a familiar face with someone that you trust around that is shouting them out. And so if any customers come up to our booth, we can actually direct them toward the other farmers, which are ingredients around. So helps them out, helps us out. Win-win and win for the customers. So the best situation, a win-win-win.
The trifecta.
A trifecta. Guys, I made a mistake. When I filed my LLC through Zen Business, again, Zen Business, I filed it as multi-member because me and my brother are kind of both running it right now. We both wanted to be a part of it, but it's pretty much just me running the whole thing right now, while Brian's working full-time doing his own thing. He just kind of like helped me out with like, you know, making the design or whatever. But because I filed both people as members, we're going to be taxed as a multi-member LLC, which if you know anything about tax returns, and I'm just starting to learn all about it now, when you're being taxed, you're taxed, there's no such thing as being taxed as an LLC. You're taxed as a type or version of a corporation under the LLC. So you're either taxed as being a sole proprietorship or an S Corp or a C Corp. And so if you're not elected to be an S Corp or C Corp, if you don't fill out any of those files, by default, you go as to being sole proprietorship, which means that all the taxes pass through the LLC and go into being taxed as like your personal tax thing, basically filing. And so you're taxed as the profits and losses of the business as being personal. So it's like you are the business, it passes through to you. And so whatever income you generated, whether it's through the business or not, that's the taxes you pay for the business. And on top of that, you have to pay a 15.3% self-employment tax on top of that. So being that it's multi-member sole proprietorship, both me and Brian will be separately taxed 15.3% for the business alone. So that's 30.6% tax for the business on top of the personal tax that we pay each, which is all the money that Brian's making right now. Basically, we're going to be getting taxed 30.6% plus the normal taxes for the state, federal, and local, which will be probably around like 40%. So we're going to be getting taxed like 70% of just like personal losses. So anything that we made a profit, personalized, not even expenses, just personal profit, like to your bank account, getting taxed 70%. That's not good. We got to find a way to fix that. Now, the thing is, with an S Corp, you're actually taxed just on the reasonable salary that you pay yourself. And so that basically means that you pay yourself a reasonable salary as a part of the business. So the business makes a certain amount of money, but then you pay yourself a salary. And you're only taxed on that salary because the same way with an S Corp and every other LLC, the taxes pass through to the expenses of the owners and the profits of the owners. And so if the owner is only being paid a certain salary of that business profit, you're only taxed total for the business on the salary or the profits and losses of the business owner itself. And so specifically for me and Brian as being the multi-members, we would only be taxed a certain salary percentage of what we would pay ourselves for the reasonable salary. And so I don't know what reasonable salary really equates to, but in general, I don't know how that would work because, I mean, a reasonable salary for the amount of work that I've put in would be way more than the amount I've generated. So I might have to generate like a loss technically for the business for this year, which I guess is fine in terms of tax purposes, but I really don't know how that works. So I'm gonna figure that out.